Welcome to our series on The Intelligent Investor by Benjamin Graham. This classic book, first published in 1949, has stood the test of time and continues to be a valuable resource for anyone looking to improve their understanding of investing. It's important to note that this video is not a summary of the entire book, but rather a concentration of the most important knowledge and insights that can be gleaned from it. The purpose of this list is to provide a quick overview of the key takeaways from the book, rather than a comprehensive retelling of the entire book. It's also not an audiobook, it is a written summary of key insights. If you want to fully understand and internalize the concepts presented in the book, it's recommended that you read the book in its entirety. In this first chapter, we will be introducing the concepts and principles that form the foundation of the book. We'll be taking a look at the difference between investment and speculation and why the latter is a dangerous game to play in the stock market. We'll also be exploring the history of the stock market and how it has evolved over the past century. And we'll be delving into the business of common stocks and what investors need to know about them. So join us as we take a deep dive into the intelligent investor and learn how to make smart, informed decisions when it comes to your money. Let's get started. Here are some key insights from the first chapter of The Intelligent Investor by Benjamin Graham. Investment and speculation are two different strategies, and the book advocates for investment over speculation. A century of stock market history is presented in the chapter, and it shows the evolution of the stock market and the business of common stocks. The chapter emphasizes the importance of investment principles and policies, and the importance of research in making informed decisions. The chapter introduces the concept of the intelligent investor, which is a long-term, rational, and disciplined approach to investing. The chapter also highlights the difference between the defensive and enterprising investors, and the characteristics of each type of investor. The chapter stresses the importance of having a sound investment policy and sticking to it through market fluctuations. The chapter also touches on the role of the investor's advisors and how they can help in the investment process. As a practicing investor, I found this chapter to be particularly insightful, and it has already influenced the way I approach my investments. I found the first chapter of The Intelligent Investor by Benjamin Graham to be incredibly informative and thought-provoking. The distinction between investment and speculation was particularly enlightening, and it made me realize that many of the investments I had made in the past were actually speculative gambles. The historical context provided in the chapter was also valuable in understanding the evolution of the stock market and the business of common stocks. I appreciated the emphasis on the importance of doing thorough research and making informed decisions when it comes to investing. Overall, I found the first chapter to be a great introduction to the book, and I am looking forward to delving deeper into the concepts covered. I would love to hear the thoughts of others who have read the chapter and discuss the topics covered in more detail. So please feel free to share your opinions and insights in the comments section below.